So what I want to do is go back to 2 weeks ago, if you don't mind, if we start there with what happened. So we've been living in a time of historically low interest rates for years, right? I don't know about you, but when you bought your first house, perhaps the interest rate was 20%, 18%. That's what I'm hearing from people who bought houses a long time ago. So we've been living in the 4s and 5s for a long time. No big deal. So
Yeah.
a few weeks ago, the Fed cut the rate a little bit, and that made interest rates go very low. So people got really excited. There was a refinance, what we call a refinance boom. And so what happened was the Fed cut the rate, mortgage rates went down, and the phone started ringing off the hook. So some of my branches received 100 refinance applications in one day. So it's
Wow.
easy to think for the consumer that when the Fed cuts the rate, that is actually directly connected to mortgage interest rates. But the truth is, it is a correlation, but not a cause. So what you saw,
Oh.
mortgage companies, especially because we just came out of winter when it's our slowest time, we had a lot of capacity, a lot of human capacity. And remember that word, because that's going to be the center of what we're talking about here, because this is a truly unique time in the world and in the mortgage industry. So we had human capacity, we cut rates, mortgages went crazy.
Yeah.
That's Monday, right, of 2 weeks ago.
Yeah.
Fast to the end of the week, the pipeline is filling up. Everybody in the mortgage industry is working 10 hours a day, 7 days a week. Remember also that when you refinance a mortgage, somebody's making money, but somebody's also losing money, right? So the company that held that mortgage is losing potential interest for the remaining term of the mortgage. And this is something really important that I'd like your listeners to know. If you finance your mortgage within 6 payments of getting it, you are actually taking the income from that mortgage out of the pocket of whoever did it for you. So if you worked with somebody local and caring who treated you right, please do finance your mortgage until you have made 6 mortgage payments on that mortgage, because we're at a time right now where everybody is scared about their income. So we just want to be really conscious of each other and something like that.
Did you say refinance?
Yes, if you refinance your mortgage or pay it off in any way within 6 payments, the person who did that mortgage with you is going to lose all of the income that they earned for doing that.
Oh, wow.
Right? So sometimes they'll tell you you're not allowed to refinance within 6 months. You are
Yeah.
allowed to do whatever you want, but it has a significant effect on whoever you worked with. Okay, so let's go back to that human capacity. So
So if I can interject, just to clarify that
absolutely.
for the listener, that would be the mortgage world equivalent of you and 20 of your loud friends going to a restaurant, spending 3 hours, having a huge meal, having fabulous service from the wait staff, and walking out without leaving a tip.
Absolutely. Or even better, you pay and then you come back the next day and you ask for that back when the wait staff has already spent that money.
Oh, even worse.
Right.
Yeah, I get it. No, I
Yep.
understand. I
Yeah.
understand it. That makes total sense to me. That's the human side. One of my favorite books from many years ago is the human side of enterprise. And
Mm.
I think the human side of our business dealings is unfortunately neglected so much of the time. But what you're saying is a perfect example of paying attention to that side of it.
Well, and that's what's happening right now. So the mortgage industry is not reacting the way that the consumer expects them to the cut in interest rates, because 2 weeks ago, as I was saying, the rate goes down, more and more refinances and purchases come in, the pipeline fills up, people in the industry start working 10 hours a day, 7 days a week. Keep in mind, the number one thing you can do to protect yourself from corona is to sleep well and keep your immune system strong. So now you have
Right.
these people who are not able to do that. So what banks have to do in that case is raise rates to slow down the pipeline. So at the end
Uh,
of that first week, we saw rates start out in the 2s and low 3s at the beginning of the week and start going back up to low 3s and 4s by the end of the week. And even into the second week, they continued to go up. So then the Fed cuts rate to 0%. They
right.
hold an emergency meeting on Sunday when they have a meeting scheduled on Tuesday, because we're at such a crisis point that they believe that they cannot wait until Tuesday. Again, unprecedented.
Yeah.
An hour later, the phone starts ringing. I'm getting texts, people saying, the rate is at 0. Am I going to get a 1% mortgage? Are there 0% mortgages?
Oh,
Monday comes, the market does not respond as expected. Rates go up instead of down because remember, we have already hit the human capacity. And the
right.
interest rates is a relationship to the federal rate, but not actually connected. And we have gone as low as we can go, people, and we are going back up. So what I think is important for people to understand right now is that this is going to be the year to refinance, right? There's a huge amount of equity trapped inside of houses in this country. And as people lose jobs, as there's uncertainty, going to your home for equity is going to be one of the things that keeps us strong and keeps us moving through this time. But that's going to happen for you sometime this year, not today and not this week. In fact, if anybody takes in your application and locks your loan this week, they're not doing you a favor because the rates are actually kind of high right now. So what I'm trying to educate
Huh.
people about is everybody in this industry is a human being. Our kids are home from school. We're in our homes right now. So above all, we need kindness and patience and understanding. But you also need to understand financially that refinancing is going to be big this year, but you're going to have to find somebody like me who will work with you, understand your situation, get all of your ducks in the row, and be ready to leap when it's time. And if you insist on leaping today, personally, I may not take your business because I know that that's not actually the right thing for you. And I'm not willing to tax myself and my team for something that is just not appropriate right now. So that's kind of what I wanted to educate people about is just this really interesting time. So just to give you some numbers in case you're a numbers person.
Mm-hmm.
So right now there's about $11 trillion in mortgages in this country.
Okay.
2/3 of those probably have enough equity that they could do a cash out refinance right now.
Huh.
Last year, the industry, so that's 11 trillion total, 2/3 of that with an ability to refinance. Last
Okay.
year was a big year for the mortgage industry. It did $2 trillion total in the whole year in mortgages processed.
Holy mackerel.
On track at this point to do 4 or 5 trillion. It's a human impossibility. So basically, it's like going to a concert. There's only so much room. We're probably going to put on another show next week, but people are going to have to start getting in line. And that means partnering with an education-based mortgage broker like myself, who's going to help you understand your circumstance, whether it's right for you, whether you're one of those people that's going to get that prime rate or not, and just help educate you about the bigger picture of where your home equity, whether that's a purchase or a refinance, falls into short-term surviving what's happening now and long-term, your big picture financial goals.